The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Bitcoin close to 18,000. Who'da thunk it? Joining us now to discuss the crypto markets is Mark Connors, head of research at crypto asset manager 3iQ. Welcome, Mark.
Thanks, Lawrence. How you doing? Good to see you, Christine.
Glad to have you on. So of course, I do want to talk about some of your views on volatility. But before we do, you see the price of Bitcoin edging close to around 18,000 or so. It did pull back a bit. Do you think at least some of it is related to what's going on in Binance, that it might be easier to get Bitcoin and move Bitcoin around than, say, I don't know, USDC at the moment, or whatever, BUSD? I don't know.
So you're pointing out that is it easier from a liquidity standpoint? Is Bitcoin's primacy as a more liquid asset is that driving it? It could be. It's almost like just,
or at least to get at least to get it out of Binance if you wanted to.
Yes.
If you wanted to get out of your position.
I don't think it's necessarily that alone. We will say, though, Lawrence, good point how you just went very narrow. We think most of the tourists are gone in Bitcoin between, the Terra Luna May-June debacle, which was one of the biggest dislocations, since 2017, and then go back to 2020, that there's so few coins on exchange now that prices could lift pretty quickly. So yes, that could be one driver for sure.
Yeah, I'm just focusing, of course, on the fact that Binance wouldn't let people necessarily get out of their, get their USDC off of the exchange, of course, because of whatever reason Binance gave.
MCZ has that internal memo saying that there will be turbulent times ahead for his staff.
Yeah, we haven't driven into that animal. But now that you're on the topic of stable coins, we just had Representative Torres on, as a New York taxpayer, I'll be giving him a call because I really enjoyed listening to him, and he sounds like he's fit for purpose to speak to the topic. He's done his homework. Stable coins, we say, are going to be the number one focus of regulators for a number of reasons. So whatever CZ's doing, and I don't have a direct line into him, but he's like you. I'm reading, trying between the lines about what he's doing with USDC. Stable coins will be forced to have treasuries backed, and we believe those assets will be at the Fed. So when you look at the opportunity for the U.S., for those in crypto and digital assets broadly, by making stable coins treasury backed, you increase integrity and you align incentives, because now the treasury has a new buyer for their growing store of treasuries. Stable coins are about 14% of the entire market. As the market grows, we would expect that ratio to hold or even expand. So whatever issues USDC or supposedly have, we think they're going to be remedied. People will stay at the more stable coin, and that's going to be treasury backed. So there's going to be volatility for sure. Some may not want to do that because it'll reduce the return on their coin, Lawrence. If you do commercial paper as opposed to treasuries, you're going to make more money. But maybe, as your volumes go down, people may then change their behavior.
Yeah, Chinese commercial paper seems to not be a great backing for stable coins, but I don't know where I got that idea. Well, let's not get into it.
We'll see. Meanwhile, let's zoom out a bit, Mark. The Federal Reserve is set to make a huge decision today on interest rates, and it's widely expected that they will moderate their aggressive tightening in today's rate decision and signal that interest rates will ultimately go, we'll see. What's your take on how that may impact the crypto markets?
there's a flattening. So if you were to overlay the U.S. 2-year, which is what the market thinks rates are going to be, versus Fed funds, which is the mandated overnight rate set by the Fed, that gap was about over 200 basis points right when Terra Luna blew up. So you had two headwinds for crypto. You had a market saying the rates are going higher, the Fed lagging, so that means that there's a lot of downside ahead of you. And you had Terra Luna, obviously the LFG, selling 3,000 Bitcoin, a lot of volatility. Now, fast forward to today, the 2-year
Mark,
and the Fed funds rate.
Your audio is starting to really.
Oh, there it is.
Oh, there it is.
Does that work?
Yes,
Much
that
better.
is much better.
Okay, good. Thanks, guys. So the point is, right now, when you say what's the Fed doing, the Fed and the market are in agreement. There's no gap really between Fed funds and the 2-year. They are, they're call it less than 100 basis points apart versus 225. The market thinks we're going to top off at 5% if you look at the futures. So if you have clarity, you have an investment opportunity. In May, June, and with FTX, there wasn't clarity. People were like, what's going on? And when you have interest rates topping out, it's good for risk assets. If you have this clarity that John J. Ray III is bringing on the FTX debacle, which was all fraud, it was Madoff, Bernie Evers, the whole rogues gallery of people who abuse good assets. When that gets pushed behind us, people are going to see that you have integrity of Bitcoin, Ethereum, decentralized assets. So I have a question for you guys, because I haven't one answer. What is your favorite takeaway so far from the hearings or the court documents that John J. Ray and his team have brought in? The things like that surprised you? Is there anything that sort of stands out?
Yes. I don't know if it surprised me, but it's that I'm actually not as dumb as Sam Bankman-Fried.